Most normal IPOs ask you for about 15,000 rupees. This one is asking for 10 lakh at minimum. This timeline shows the mechanics. It's a 244 crore rupee offering opening between April 10th and 16th, listing on April 24th. But you aren't buying shares in a standard company. You are buying into an SM REIT. Fractional ownership means your 10 lakh buys you a direct, proportional slice of a specific physical commercial building. That massive entry ticket changes the math. It locks out the casual retail trader looking for a quick listing pop, requiring you to evaluate this exactly like an institutional investor would. This chart maps the cost by comparing minimum entry capital against liquidity, how easy it is to get your money out. Normal mutual funds and standard market REITs sit over here. You can start with 1,000 rupees and sell your position in seconds. But this SM REIT sits out here on an island. Maximum upfront capital, minimum liquidity. You have to decide if locking up 10 lakh rupees is a fair trade for a projected 8.9% passive income stream, or if losing access to that cash is too dangerous for your portfolio. To make that call, we must ignore the marketing and ruthlessly strip down the physical real estate backing this trust. The underlying asset is a grade A+ commercial building. It carries an IGBC Platinum certification, meeting the highest tiers of energy efficiency and corporate infrastructure standards. Right now, every single square foot of this building is already leased out. It is at 100% occupancy. For an investor, a fully tenanted building eliminates lease-up risk. You aren't subsidizing empty floors while management hunts for companies to move in. Geographically, this property sits directly inside Ahmedabad's secondary business district. 86% of the entire city's commercial leasing demand is concentrated inside the specific zone, creating a highly defensive moat against competing office parks in the suburbs. Because the asset is already fully optimized and sitting in a high-demand node, your capital generates immediate rental income from day one, instead of betting on speculative future development. That day one rent is the entire financial engine driving your returns. This line graph plots the projected yield for incoming investors. Assuming standard escalations, returns climb from 8.1% in 2026 to 8.9% by 2029. Supporting this is a net operating income margin locked at 100% and an EBITDA margin near 95%. Practically, those margins mean nearly every rupee collected from the tenants passes directly through the trust structure and into the investors' pockets as profit. When a building is already maxed out on space and running this efficiently, the variables shrink. There is very little room for sudden operational disasters, but also no room for sudden windfalls. You are buying a highly calibrated cash flow engine. This is an income play, not a vehicle for massive capital appreciation. The reliability of that cash flow depends entirely on who is actually writing the rent checks. This entire facility relies on just 4 multinational corporate tenants.
This timeline shows the weighted average lease expiry, or WALE, which measures exactly how secure those contracts are. The marker sits at 6.72 years. Having a lease lock-in of nearly 7 years gives you clear medium-term visibility on your income, effectively shielding your yield from short-term real estate market dips. But the trade-off here is severe concentration risk. The math looks secure on paper, but if just one of those 4 multinational corporations decides to relocate in a few years, 25% of your yield is instantly exposed, while management scrambles to fill the vacant floors. You could take that same 10 lakh down payment and simply buy a physical shop or small office space yourself. The difference is who runs the property. This SM REIT is managed by institutional teams backed by Westbridge and Lightspeed, drawing on executive experience from Blackstone. This matrix compares direct real estate against the SM REIT structure across management effort, liquidity, and predictability. You score a 0 on effort with the REIT, escaping the reality of chasing tenants and maintenance. But that 0 effort convenience costs you management fees. More importantly, it costs you total autonomy. You surrender all rights to select future tenants, negotiate leases, or decide when to ultimately sell the building. You pay a premium in fees and loss control to convert the real headaches of being a landlord into a strictly passive financial instrument. Which brings us back to that 10 lakh minimum barrier and what happens when you want to cash out. If you own shares in a standard 300 rupee public REIT, you can dump your position on the open exchange in seconds.
Escaping this SM REIT requires utilizing the secondary market to find another high net worth individual willing to absorb a massive 10 lakh block of units from you. That high friction acts as a double-edged sword. It physically prevents retail investors from panic selling and crashing the price during a market dip, but it also severely restricts your ability to access emergency cash. The massive entry cost artificially stabilizes the asset's floor price, but it permanently traps your capital in a highly illiquid state. This decision tree maps out exactly how to position yourself for this IPO, starting with one baseline question: do you actually have 10 lakh in liquid risk capital? If you are a curious retail investor stretching your savings just to participate, skip this. You will sacrifice necessary financial flexibility, and the illiquidity will hurt you. Let go of the FOMO. If you have the capital but want tangible control, the ability to actively renovate, manage, or flip a property for a higher valuation, skip this and buy direct real estate. But if you have excess liquidity and your explicit goal is trading that cash for a predictable, completely hands-off yield to balance your broader portfolio, you should consider applying. Take a look at your own portfolio. Are you applying or skipping? Drop your decision in the comments below.
हमारे सभी सोशल मीडिया अकाउंट्स की लिंक पिन कमेंट और डिस्क्रिप्शन में दी गई है। आप हमें सभी सोशल मीडिया प्लेटफॉर्म पर फॉलो कर सकते हैं।
ट्रेडिंग और इन्वेस्टिंग में मार्केट रिस्क होते हैं। इन्वेस्ट करने से पहले अपने फाइनेंशियल एडवाइजर से सलाह लें।
इन्वेस्टमेंट की सोचें तो ट्रेडिंग जीनी के बारे में सोचें। अपना भविष्य सुरक्षित करें। आज ही अपना डीमैट अकाउंट खोलें।